All right, everybody. I'm Sam Perrin. Welcome to this walkthrough of this spreadsheet so you can do some detailed planning and find out what your gap is for your life goals based on where you are and potentially how much real estate or other income you need to bring in. So this is just a quick walkthrough of like a generic template of this spreadsheet. Fill in all your own information to sort this out for yourself. In this example, we've got a single person with 3 children, and yeah, we'll go through the income and expenses, and I'll go through the various tabs here so that you can get something that looks like this in the end. So you can see what your income is year by year projected into the future. You know, you can go as far as you want, all the way up to retirement age. Like this person, for instance, spreadsheet stops at 78 years old. You can use the median life expectancy in your area and then factor in your health or whatever to see how far out you might want to plan your retirement income to go. And then you at the end of it, you'll get a big fat number here to see if you've got a surplus or, in this case, a shortfall of your assets and your income versus your expenses. So let's jump into it. We'll start here with the cash flow statement. So just enter in what you have right now as far as income goes. So I've got, this person's making $52,000 a year, paying roughly 20% tax, gets some tax credits and benefits from the government for a total monthly income after taxes of $5,000 a month, $62,000 a year. And then we just look at the budget for what this person's paying monthly as far as rent, electricity and gas. They're renting, so there's no property taxes. You pay tenant's insurance so that if there's something that happens to the property, burns down or something, and you're not home, then you don't end up in a you need some insurance. You got a place to live. You can replace your belongings or whatever. City utilities not applicable. Get rid of that. This is actually in the wrong column. There we go. So you'll edit this to suit, maybe you don't like red or green. You can change whatever you want. But anyway, you just put down all your expenses. There's housing, there's transportation, and family living, right? So there's pets and TV or phone, cell phone. Basically everything you spend money on should go in there. So this person is basically living paycheck to paycheck right now, small annual surplus. So at least it's not a deficit. Next step, this first tab here is just where everything is summarized, where you can kind of get your net worth. You're going to need to provide this to lenders, maybe to joint venture partners, and it's important for you to know where you are financially so that you can apply for credit or whatever. Next step is to look at your cash and loans. So we got $6,000 of cash. Sorry, this is credit cards, not cash, and $150,000 in student loans. We've got some corporate accounts listed here, and we've got some more corporate funds. If you don't have a corporation, just leave all that zero, and then personal accounts, how much money you have in various personal accounts. There's children's savings accounts. You pretty much want to list everything you have. If you got Bitcoin or whatever, you can put it all there. So the total assets here personally added up with the corporate assets here gives you kind of the amount of cash that you have. These are non-registered products, so this is outside of any retirement accounts because you can access this. In theory, it's cash that you have access to without having to pay taxes or whatever. So there's your debt, there's your non-registered bank accounts, whatever, and registered products. If you've got a pension or something, this person has a loan. They've loaned some of their registered funds IRA or RSP or LIRA or whatever your registered account plan is called. There's some registered funds. You total it all up, and that gives you how much you have in your retirement accounts. You want to list out your life insurance. Hopefully you have some life insurance. This person has an annual premium of almost $4,000 a year in life insurance, so that should be reflected here as well. Yeah, there it is. There's the annual premium. Because if you die, if you've got dependents or debt, you don't want them to be experiencing additional hardship along with the loss of you as an important person in their life. So, yeah, and this is just a listing of some assets. Loans to companies. This is the registered funds. Value of a pension. If you were to quit your job, kind of what they would pay you. So you make a list of all that, and you customize this to what you want. So life goals. This is interesting where you get to dream. So this person wants to pay for university for their 3 children. And current lifestyle, spending about $60,000 a year. Let's see. Yeah, presently spending $60,000 a year. So that's our current lifestyle goal. Would like to be financially independent by the time they're 51, which is in 2036. And retirement income, this can be whatever goal you want. And then you would put those goals year by year into your spreadsheet, right? So here's the age of this person. Here's the age of the children, right? So you got a 14-year-old, 13-year-old, and 11-year-old, and you just carry that forward. You've got this is just information about the life insurance policies, which in theory will never pay out, so that shouldn't really factor into anything. And then you put in your registered funds and how much you expect them to grow. I think I picked 3% a year. So you're not going to be touching this money. It's going to be invested and it's going to be growing. You might do a lot better if you invest in something else that's better than 3% a year. Non-registered funds, I did the same thing. I assumed it would be growing at 3% a year. And then this person has a couple rental properties. So there's a real estate tab here. And if you presently have rental properties, you can list them here, how much equity you have. So this property is worth roughly $650. It's got a mortgage and a couple second mortgages, and net of all the payments, or if it was sold right now, it would be worth roughly $290,000. Here's the other property, and if it was sold, it would be worth roughly $340,000. So there's $630,000 in real estate. Yeah, so these numbers are equity, I believe. How much it grows, or how much the mortgage gets paid down. The numbers don't exactly match. 290 and 340. So we can amend that. 290 and 340. So we'll just carry those forward. Oops. So the math here starts to make sense. Okay, we'll multiply these by 3% a year as well. So that'll equal that times, even though since there's a mortgage on it, we should probably double that, because if it's 50% loan to value, you're going to get 6% a year if you see appreciation of. And if you don't understand that, then dive back into kind of the how real estate works. So we're gonna carry this all the way forward to, how far forward should we go? Okay, and yeah, and then we've got appreciation here of 3%. And we're assuming we're going to hold these rentals all the way through to the age of 78. So anyway, that gives you, anytime these you might buy more rentals, you might sell these ones. So, you know, it's just an estimate based on current trajectory without going into too much detail. So there's employment insurance if you've ever earned any of that. And then employment income. So we've got slight raises in income. Hopefully you're going to be making slightly more as you become better, more skilled at your job. And then the kids' benefits carry forward until they age out. So if they're in university, you might still get some, but this is probably, we should probably delete a few years here because they're no longer minors basically here. We'll delete a couple more years just to for the sake of trying to be more accurate. Yeah, so your kids start to age out about 2028. So I guess we'll get rid of that one too, because you won't be getting government benefits once they're adults. So then we've got total salaries, pensions, children's benefits, etc. And that's basically any income. If you had a spouse, you could enter their income here as well. And you're going to be cash flowing on these properties. Hopefully they're good investments. So the cash that you're going to make, $24,000 a year, and that's going to grow slightly every year, hopefully with rent increases. And you can project that out. Here we have proceeds of real estate sale personally held. So this person's renting, and they're selling. Looks like they're selling one property here, or they're selling both properties here, and the gain is going to be $700,000. So that, let's see here. So then that means this capital should grow quite a bit for the rental. Yeah, okay, that's about right. So that says 900,000. So let's delete this column because we've projected that we're going to be selling these properties here at the age of 60. So that makes sense. But you can, like I say, adjust this to what fits your plan. And then we've got savings. You know, there's a tax-free savings account, so that we're going to assume no more contributions. There's some cash saved. We're going to assume no more contributions there, and no more contributions on the registered education savings plan. That should stop when the kids are, you're not going to be saving for their education when they're adults, right? So we'll just back those out, because that'll be cashed out and added to income. It's not a large amount of money, so I'm not going to worry about updating the income. So we've got here, looks like I accidentally juiced the income for all of these by about $1,000. Oh no, 1,200 a year is what I've said here. You're going to have as a surplus. Oh, 1,700. So you can play with the modeling as much as you want, but you can see how that, you know, there can be errors. Like even in this spreadsheet, there's some errors. You just want to make sure that your total income is accurate. So we've got, so this one should have investment income plus salaries and pensions, and really that's all. That's what they should all say. So we'll just get rid of that. This one should be that. Okay. So if we drag this through all the way, we should probably have a more accurate number. So this is going, yeah, so total income. And let's look at the year that we sell those rental properties. That's here. There. And yeah, so this is our retirement age. Investment income stops. But your employment income is going to continue all the way through to age 66. So that makes sense. I mean, you can work as long as you want. Maybe you slow down. Maybe you only work part-time as well. So you can model this however it works for you. So we've got our lifestyle, and our expenses are going to increase, and then right around retirement, or right around 55, we're going to start spending money traveling more. And then I'm going to assume retirement income is just going to stay at around 100,000 a year. So that basically, you got your income, you got your outflow. You're short about 74,000. So you got to find a way over your lifetime to make an extra $74,000, which wouldn't be very hard if you buy an additional property or two. And maybe you don't have to pay for your kids' education. Maybe they get scholarships or pay their own way through, like I did, and many successful people I know paid their own way through. So that's $360,000 that hopefully you don't have to incur. So that basically gives you a tool for planning out your major goals in your life. These are just some information tabs. If you don't yet have real estate, then you wouldn't fill that out. I found this useful. I looked up my local government benefits, because if you have the opportunity to earn corporate income and you do that, then potentially you're not paying yourself out of your company, and then you can keep your personal income below whatever threshold you want to maximize your government benefits. So, here we have the Canada Child Benefit. There's a child disability benefit, if that's applicable, if any of your children are disabled, your BC early childhood tax, and you can see that, every additional dollar of income would reduce these benefits at these. So you can figure out if you've got any kind of these programs for yourself. You can make a table like this for yourself. And if you're loaning money to your companies, hopefully you're going to get a return on that money, so you should track that. So that, here's just an example of some shareholder loans. And if you're looking at buying a property, say a ski condo or something by the lake, you can see what the cost of ownership is, and then factor in revenue or whatever, and see maybe it's. I found it's always worth it just to invest your money elsewhere. Vacation properties, unless you're making a business of it, are not. They're going to be a weight on your finances and not adding to them. So it's fun to vacation, fun to think about owning a place where you like to vacation, but unless you're there almost all the time, maybe in retirement, it's not worth it. But sometimes there's opportunities to buy things at a discount. And this is just for interest's sake. Maybe you want to track what your income was. Just look back in time at all your tax filings, and then you can kind of make an estimate of what you might earn in the future. So that's basically a rundown. It starts here with the cash flow statement, and I find it to be a really useful tool for long-term planning to input your life goals and your projected income and assets and everything year by year until the day you die, hopefully. And then you have an idea of you can see how old your kids are and stuff too, right? So maybe they're at, maybe they're getting a start in life and you want to help them start a business, or you can add all that to your goals. Maybe you want to give them money for a down payment for a house, or whatever the case may be. So it's just, yeah, it's just an interesting tool that I found to be useful for long-term planning, to kind of help you find out, okay, how much am I short from the goal that I have? You know, maybe you want to build your own home that's going to cost $1 million. So you would add that in, and you would pick which year it would be, and try and arrange things. So yeah, hopefully you have an estate surplus. You don't want to run out of money before you die. And if there's an inheritance you can pass on to somebody, then I'm sure that person would appreciate it as well. So yeah, and then you kind of get a financial statement like this net worth statement. So that's it. Just a quick walkthrough of this spreadsheet. I hope it's a tool that you find useful as well. Have a great day.